Welcome back to the Eric Krown Crypto channel. Wishing you a happy, healthy start to this nice first day of March, baby. It's March 1st. It's Wednesday. It's hump day, and Bitcoin's humping it up, of which a lot to talk about in the higher term timeframes. I want to follow up on all of the macro timeframes, the monthly and the bi-monthly, as we get into it. And a lot of emphatic statements are probably going to be made. Maybe even statements that I regret. But it all comes down to this, man. It all comes down to this. And I'm ready. Anyways, before we get into it, I do want to say, I do want to give ByBit their piece right now, because they've actually been offering up a pretty damn good promotion with 0% on maker fees for derivative contract orders. I believe my link in the description below is the only one that actually offers that, and they're actually going to be coming out with even more greater promotions coming on relatively soon here, like actual good ones for traders, like reduction in fees maybe. Anyways, let's just jump right into it right now. I want to start off right in over here. You know where I'm going with it, baby. You know where I'm going with it. It is, of course, the monthly accumulation and distribution indicator matched up with the monthly chart. And what are we looking at as of right here? Well, first, let me explain. What am I going to be explaining? Well, it is this particular lines right here, of which anytime that we've seen slope changes in the extreme highs and the extreme lows, we have observed macro shifts in market direction. So in this case, I'm obviously focused on the slope changes from downslope to upslope in the red zone. And these have correlated, as you can see, with the green vertical bars, all macro lows in the past. In fact, I should say a little more accurately that it's correlated with the lows on the macro scale already being in, and Bitcoin essentially entering into that choppy sideways and up period. So of course, it's not just saying like things go on rocket ship mode or any of that bullshit immediately. It can obviously take its time. You can see that this one over here in 2015 took that took like almost a year, I think. Yeah, from February 2015 to October 2015. Yeah, might as well be a year right there. And of course, again, over here in 2019, you can see that things still, took their time going sideways. And the same thing over here in 2020 as well. Anyways, the reason why I bring this one up is because for the first time since basically 2021, we do see an upside slope. And when I say 2021, I mean like July 2021. Yeah, there was a little one-off right here, but at the end of the day, that was still in the green zone, not in the red zone. In this case, we do have our first chance to have a monthly with a positive slope. So it actually is pending confirmation at the closure of this month, but obviously, one thing before the next. We've been patiently watching this one over time, and I've said it for a while now. This would be the probably the biggest piece for myself, feeling comfortable to say that, hey, statistically speaking, the lows are more likely to be in than they are not. Amongst many other things as well that we've been looking at on this channel, which we'll go over maybe one or two of them. Check out the long-term analysis videos if you want a more in-depth review of that. Anyways, again, in this case, I do want to reiterate my stance with this, though. Just because it is a positive slope right now does not mean that Bitcoin can come back down hard, actually. Come back down hard to maybe even 19 or 20,000 bucks. It is possible, yes. Just like you saw over here from 2019, retested over here in March 2020 on the old Rona dump, and then same thing over here in 2015. You can see a retest almost a year later, about 6 months later, it looks like. So ultimately, it would suggest that the lows are very likely in, but it does not mean that Bitcoin might not retest the lows after trying some more sideways, maybe some more upside moves as well. Putting this on top of the next chart, I do want to bring this one into view as well. In this particular chart, I did a measurement from when this indicator, the accumulation and distribution indicator, turned red to the next macro low. So here's a circle turning red, next macro low right here, turning red. Turning red, next macro low right here. You get the point, right? Anyways, in these cases, I've then measured the percent drop from that point to the next macro low and found that on average, there was about a 61.34% correction, which is interesting, but without context means nothing, because why is that interesting? Well, on the most recent one where this turned red in May of 2022 to the current low is 61.63%. Pretty fucking on the nose right there. Again, you do expect some variance in there with a standard deviation of about 5.5%, but like it might, the picture that I'm painting is it reasonable to say that the low is in, based off of this? Say it's a reasonable consideration. I mean, again, like let's put things into context. Like Bitcoin went down 75% basically from the high to the low. No, man, it needs to go another 50% down right now, right fucking now, because my lines told me so. Well, fair enough. How can you argue with that? Anyways, I did want to take this. I did want to follow up on the last thing that we looked at yesterday as well, which is the bi-monthly chart, which closed last night. A couple things of interest here, or one thing of major interest right here, or actually two things of major interest. One, and maybe less important, would be the hidden bullish divergence on the last few lows, or I guess I already have it in there. That'd be this low from 2015, that would be this low from 2019, and this particular low over here from 2022, November. I think the blue line kind of gets it, but I do want to draw all of them in right there. And so, you know, hidden bullish divergence probably does beget at least a try towards somewhere around the 21 and 9, which are kind of pinching together. The cyan and the yellow moving average right there, which are around like $26,000. And then, of course, the next and probably more important thing would be looking at volatility represented by the BBWP indicator. And what do we see here? We do see that the BBWP crossing the what's called the moving average in this case has actually been indicative of well, not just the lows being in, but momentum actually volatility actually being beginning to the upside. Now, of course, we only have two prior iterations for this one, but I thought that was rather interesting, especially with a bounce thus far off the 55. Taking this another step further, we can go back on over here on the monthly. Again, monthly hidden bullish divergence. We've seen all prior bear market lows, macro lows come off of hidden bullish divergence. And again, this one is still following through. Need to see the next one, the next tick back above the moving average right here. That would be the next sort of, major thing, which would happen at the end of this month with the closure above 23,950. Credit to Caretaker on this one. And then one thing, a point of contention here, actually. So, one thing that I was really looking for coming in from last month to this month would be if the jewel light turns cyan on for the February closure and then leads into March. We actually didn't see that happen. It remained white. So, yes, the prior macro lows have kind of operated in that prior fashion, but in this case, we actually don't have confirmation of cyan just yet. So is momentum really beginning like hardcore to the upside? I don't have reason to believe that just yet. That's why I do say it's still a transitionary time, probably more or less a range-bound market, between 20 and 30. I think that's probably what we're gonna be seeing for a while. Now, I do want to flip back into this. Let me just make sure I'm recording. Am I recording? Oh, is this thing on? It's on. Great. Fucking great. I do want to flip back into this as well. So we're looking at the 12-hour Jewel Light setup, which fired off on the 26th. That was Sunday. So that was a few days ago now. And what essentially is the setup? Well, the setup is this. Anytime that we've seen the Jewel Light on the 12-hour time frame come below the 35, which, by the way, this strategy is freely available on the YouTube channel from like 4 or 5 months ago now, and then turn white below that on the first tick alongside a daily uptrend, well, we've observed some pretty nice statistics that suggest that things are likely to trade further north from there. In this case, let me just make sure that you can see it. Okay, indeed you can. And we see that with that particular setup over the past 3 years, it's actually been only 16 iterations. Now, I can extend that more by negating the daily condition, but let's just look at this one for right now because this does exist right now. 87.5% were profitable, and there's a profit factor of 7.7, which kind of seems like a lot. But if I am going to reference this data, not using a daily filter, let me just get rid of it. We can extend those iterations all the way up to 42 over the past 3 or 4 years. Hit rate basically 71.5%, so still pretty damn good, or at least I would say so, and a profit factor of about 2. So what would that suggest? Well, I would suggest that we're probably going to see a relatively short-term move based off of the average bars and trade at about 18. So 9 days, which we've already seen like 1, 2, 3, 4 days of that happen, somewhere into like the mid, maybe even deeper $24,000 territory. So we also saw one of these happen relatively recently. This was in mid-February on this move from about 21.8, giving a bias for a move to 24.5. But again, we're talking about probabilities here. We're not talking about certainties. So at the end of the day, what I really love to see in this community and what I love to see on the Discord is, when some interesting folks seem to maybe not understand that potential that particular point, there's a lot of people who will actually like correct them, but I do want to once again remind the community that, hey, 71% strike rate, which is pretty good in my opinion, very, very good, is not 100% strike rate. So we're going off of probabilities, we're going off statistics on this channel. I'm not going off of just in my opinion, subjective sort of things. And so the picture that I'm basically painting right now, in a more serious tone and more sincere tone, is that long term there are a lot more things pointing that the macro low is in. Doesn't mean that Bitcoin can't retest somewhere reasonably close to the lows, but ultimately it'd probably be another major opportunity long term. So I think that's a good place for me to be leaving off on this particular video. I think I hit just about all the points I wanted to. Oh yeah, there's one last thing, the daily HPDR ranges. We can see that Bitcoin still just holds the 50% of historical returns range lows. It's been tested multiple times. Oh, and I forgot to go over invalidation conditions. So let's just go back here. What would invalidate this setup and actually validate a pretty nasty downside move, or relatively speaking? Just need to see a 12-hour closure below the wick lows here, which is 22.7 or so. It's been tested multiple times now, but so far so good. Anyways, back into the last chart of the day. Daily HPDR ranges here. We can see the 50% of historical returns range lows still holding up on a closing basis, which is about 22.9. So either like a 12-hour or daily closure below there, very likely going to see a move back down below 22, probably below 21 with a bounce along the way. But until then, the longer that Bitcoin kind of sits here without breaking down, the more and more likely you're going to see that move back up around the median here. Which, yes, this is actually a median, not a mean calculation. So somewhere, back around the current highs, which kind of does play hand in hand with this setup over here. Anyways, I think that's a good place for me to be leaving off on this particular one. Yeah. What else? Yeah, we got a sale coming up. Probably should have mentioned that in like the next week or two, somewhere in there in March. So, I would say, if you're considering investing in any one of the programs or products, wait a couple weeks. It'll be a little bit less expensive. And other than that, I want to be wishing you the best as always. Take care, much love, and see you hopefully soon.